Welcome back to Frugal Hacking News. I'm the Frugal Traveler, your guide to navigating today's money changes without losing a dime. In the last 24 hours, two massive updates hit American wallets. The Federal Reserve cut interest rates, and the big banks immediately dropped their prime lending rate. We'll break down what this means for your household budget, who's hit hardest, and, most importantly, specific hacks you can use right now to stay ahead. By the way, I usually bring you 3 stories. Still, today only 2 met the strict criteria of verified breaking consumer budget news. So we'll dive deeper into these 2 game changers. First up, the Federal Reserve just cut its key interest rate by a quarter point from 4.25 down to a range of 4 pound to 4.25%. This is the first rate cut since late 2024, and Fed officials hinted that more may be on the way. Why? The job market is cooling, and they want to ease pressure on borrowers, even though inflation is still running hotter than their target. The budget impact and AMP. Implications. In the short term, borrowing costs on variable rate credit cards, home equity lines, and personal loans should dip slightly. Over the next 3 to 6 months, mortgages and auto loan rates may soften, making refinancing or new borrowing a little cheaper. Winners include families carrying variable debt, individuals shopping for a home or car loan, and small business borrowers. Losers, savers and retirees relying on interest income, expect slightly weaker returns on CDs and savings accounts. Actionable budget hacks. Refinance or lock in lower rates if you have adjustable rate debt. Shop around for lower rate credit cards or balance transfer deals. Delay new fixed-rate loans if you think rates will fall further. Move savings to accounts still offering competitive promo rates. Redirect savings from lower interest bills into paying down principal. Story 2. Banks cut prime rate. Right after the Fed's move, the biggest U.S. banks, JP Morgan, Wells Fargo, Citi, Bank of America, slashed their prime lending rate from 7.50% down to 7.25%. The prime rate is the backbone for lots of consumer loans, credit cards, adjustable mortgages, and business credit lines. The budget impact and AMP implications. If your debt is tied to prime, you could see interest charges fall as soon as your next billing cycle. That means slightly smaller minimum payments and more of your money hitting principal instead of interest. Businesses borrowing on prime will also get relief, which could keep prices steadier for consumers. But again, savers may feel squeezed as deposit rates slowly adjust downward. Actionable budget hacks. Review your loans, check if they're tied to prime, and recalc payments. Make extra payments now to pay off debt faster while interest rates are low. Call your credit card issuer and ask for a rate reduction. Use your good history as leverage. Avoid locking into loans without confirming the new lower rate applies. Consider consolidating debt into a loan that directly tracks the prime rate. So here's the bottom line. Rates are finally moving down. If you're a borrower, this is your moment to act. If you're a saver, you'll need to shop harder for yield. Remember, I only share verified consumer budget news within the last 24 hours. Today, that gave us 2 powerful stories instead of 3. But both are big enough to shift the way American families borrow, save, and spend. Question of the day. What's the first financial move you'll make in response to these cuts? Drop your answer in the comments. I'd love to feature some of your hacks in the following video.